We did it all right. Everyone's smiling and looking forward.
It's nice that they have a 3, 2, 1 now.
Yeah.
That does help.
Well, Eddie, as we told you, and everyone knows as well, they've seen enough times, Rachel and I get on this and she's looking somewhere. It happens.
We're always like, oh, we're here. We're live. Hey, everybody. Welcome to our Wednesday LinkedIn Live. Rachel and Joshua Bealey and our special guest, Eddy Perez. Yay.
There we go. Well, Eddy's one of our clients, and he's also the CEO of Equity Prime Mortgage in Atlanta. And, we really wanted to kind of go in, Eddy, because, look, you know the mortgage world better than most people I know. And, we love to be able to kind of bring in amazing experts like yourself and be able to go in. I mean, you and I and Rachel were just talking about our kids and family and things like that.
Yeah.
And it's amazing, right? Because we all kind of get on and everyone looks at LinkedIn and they go, okay, well, we only have to talk business. But, yes, there's business, but there's other aspects that are kind of going on. Like we talked about the family side.
Sure.
And, that's kind of where I wanted to kind of go with it, is it's like, all right, while we're kind of going in, give us a little more background of, how you got to where you are and how you founded your company.
I'm very fortunate. I always tell people to have kind of the best of both worlds. And what I mean by that is I was born in this country, but I came from immigrant parents from Cuba. I didn't know English till I got to kindergarten. So that now allowed me to have 2 languages that I can speak on a dime, because half my day for 13 years, starting from 5 to 18, was English and half was Spanish.
Wow.
So I went to college for finance, wanted to be a stockbroker. I learned how to pick stocks, but then the crash happened. And my father had been in residential contracting to build homes. Somebody said, hey, you studied finance, you like people. What about the mortgage industry? I said, oh, why not? Went online. My girlfriend at the time, now wife, said her hairdresser's husband was in the business, loved the interaction, try it. I went on something that a lot of people probably don't know that, me and you do definitely, but monster.com, that now no longer is really around. Found somebody who trained and just got in the business and fell in love with it. A couple years in, I started my organization, February of 2005. But first we started as a broker. Then in 2008, during the crash, we became a lender, and then just slowly but surely moved it to where we are today with a little bit under 500 employees, and just really excited really for what's going on in the industry. More importantly, what it does for your average American, what it does for the consumer, just the whole experience of home ownership, what you get to do, owning that piece of what I call the American gift. I know a lot of people say American dream. I always like to say American gift, because a dream is just a dream till it occurs. And I think in this country, it's truly a gift. It's what you do with it. That's really what it's all about in the end.
We see that all the time. I love that.
Yeah, absolutely.
No, that's amazing, Eddy. It's funny. You and I have never talked about this, but I actually went to college originally for finance as well too. I was going to be in international finance. They were like, you need to learn 2 languages. You already had that on me. And I was like, I'm out.
I studied corporate finance, by the way, and they said, oh, you got another language. It's funny. I did the same road, but I use it. I love finance because what it taught about strategy and input and how to bring people together.
Yeah.
Because as I jokingly say, I thought my major should be accounting. I sat in it for 1 week. Yeah, this ain't for me. I like to jokingly say, yes, accounting is definitely the language of business, but finance, I think, is the language of strategy and bringing people together and how to leverage and really go to that next level. So I'm grateful for that foundation.
Absolutely.
Yeah.
Well, it's actually before we get into some of the lending environment trends and the housing bubble, it's really fascinating. You started this company, right? You're an entrepreneur. You built it to 500 people. That's really impressive. And I'd love to know, as you think about your entrepreneurial journey, what what do you think got what kind of keeps you going? What got you to where you are today and to be able to affect so many lives?
It was just a belief. I came from, I think it goes back to my family, and they lost their freedom. So it was one of those. They never pushed it on me. That's one thing I'm very grateful for. My parents always said, and my father's passed, my mother's still alive, but she said, I don't care if you become a janitor, just become the greatest janitor that you ever are. So I think it was just a natural drive. My father was self-employed. My uncle, they were my 2, heroes and my two fathers. My mother, it was just one of those. My grandfather back in Cuba on my mom's side was also self-employed, self-made, and self-made in the sense of, I know that's a term that gets abused a lot because a lot of people play it off either as one of two things, like self-made, like nobody helped me, but everybody knows anybody who made it anywhere. It was not even a village, it was an army that helped you along the way, even if you didn't know it. But self-made really means you had to believe in yourself first. And I think that's what a lot of people don't realize is it is not I've got to see it to believe it. It's a believe it to see it. And you got to believe first. And I think it was just a part of my personality of wanting to control my own destiny. And then I've always been a big fan of people, bringing people together, part of that togetherness, that fun. There's certain things that bother a lot of people that never bothered me, like not having a guaranteed paycheck actually keeps me inspired to get better, not, oh my God, I can't pay my lights. It's just a little bit of a different mindset that I have to say. I believe that most people, it's 75% your environment, 25% your wiring, but the 25% of your wiring on how you adjusted to your environment and your growing up, I think that's a big piece of it. And I say this all the time. I'm very, very fortunate for my family. I'm very fortunate for this country and even all the people that helped build this organization. Yeah, we're at 500 today, but it started off with 2. Many people that are here that we still keep in touch with that left or decided to go on other ventures, and even some of our mistakes. I think people don't really realize, and it's something we're about to kick off at the company, that if you go 3.5 for 10, like baseball, if you bat 350, you've had a hell of a life and a hell of a career. I think people don't celebrate the hard hit balls in life. They don't celebrate the deep fly balls, but that's actually what leads to the home runs and winning. You're not going to go, I think that's some unlearning people need to do in this world. You're not going to go 7 for 10. This isn't trying to play, Aaron Rodgers or, Patrick Mahomes. Life's a lot more like, 3.5 for 10. You've done very well if you can follow that. I mean, heck, if you go 2.5 for 10, but it's really that extra grind that you got to get to. So to answer your question, to finalize it, Rachel, I think it was just part of my wiring and my environment. And it's not something I set out by a certain age I had to do. My belief was when I found my love, it would lead me, my passion. And that's exactly kind of how it went.
I love that. Yes. As somebody that left her corporate job and is now, an entrepreneur and business partner, I think, not the stable paycheck still kind of scares me. So I'll learn over time, which is a perfect segue into money.
I've been doing it for 20 years.
Yeah. He's like, we're fine. Don't worry. And I'm like, ugh,
You go through, you spend money to make money, you go through the whole thing. And this is the beautiful thing of it. So
I know. If you're watching us right now, we'd love to hear from you. Say hi, let us know where you're in at and any questions you might have. So hot topic, especially for those, a lot of the conversation will be around US based,
Yep.
We do have a lot of international.
We do have international folks, but still very interesting. It is pretty crazy, the housing market right now.
I don't know what you're talking about. I mean, it seems like I just,
can't buy a place. I mean, it is insane. And so Eddy would love.
Wild.
Yeah, it's wild. So can you talk a little bit about the housing bubble or not and kind of what's going on?
Right,
what do we do?
Before I lay out, my truth, it's more about what's going on. And first time home buyer market, I'm always one that likes to go to demographics because it's not that it's unemotional. It paints a very good picture for everybody to understand.
Yeah.
And the average first time home buyer is 31 years of age, right at that 31, 32 years of age. So when you look at demographically America, and it's kind of wild when you remove it out because it was somebody else, a gentleman by the name of Barry Habib, that opened my eyes up to this many, many moons ago. And by the way, mortgage, genius, who now has turned it into so many more careers, including owning Rock of Ages off in, New York and all that stuff.
Okay, yeah.
But he always went by demographics, especially in whatever industry you're in, because there are demographics that kind of point it out. Well, starting in 2006 to 2020, not even just from a percentage, but even from a sheer number of volume, it was the lowest amount of people turning 31 and then 7 years later turning 38. Why is that so crucial? Average first-time home buyers around that 31, 32. About your second home is about 6-7 years. So America went through the worst 14-year span. And what people don't realize is real estate in the American economy and its services represent 25% of the economy, of the largest economy in the world. If it was its own economy, it would be almost the size of Japan's economy. So that's kind of wild. So think about if they're about to go through the worst demographic of buying behavioral patterns. People say, oh, millennials don't want to buy. No. That's patterns maybe a year or two later, but don't buy they're all in the basement and all that unlearning and garbage. So then 38 is very important because that's when you become a second-time home buyer. And why is that so important is because that doesn't necessarily mean you become a third or fourth-time home buyer, but if you become a first-time home buyer, there's a high percentage chance you become second. So I lead it to where we sit today. We are entering the greatest 14-year run in American history when it comes to buying. So I'm not even talking about percentage. I'm talking about sheer number too. So not only do we have the most amount of people, we also have the most in the highest percentage during the largest population of this country's history. Well, throw into that home builders, because of the crash in 08, because there was so much inventory that added, just didn't build, as well as a lot of the banks and the regulations haven't really fostered that, somebody who builds 15 to 20 homes, that little guy that still is a builder, puts up one house a month. You have, on top of having increased demographics, you have the lowest level of new homes being built. So, do you have a bubble? People are going to have their own thoughts. My truth, I can't say it's the truth. I think it's the truth because of just so many different discussion points. You have about 3.6 million home shortage, while that number is not going to get lower because there's going to be even more 31-year-olds next year.
Right.
So you have a situation where you need more inventory. So how can there be a bubble when there's just not enough homes? The demand is too high, and it's not like rent is so much cheaper. A lot of times buying a house today, even somebody goes, oh my God, $400,000 in debt. And trust me, that is serious debt. Do not get me wrong. I'm not going to sit here and say that's not a big deal, but go get a decent apartment for you and your family, or even you and a significant other. You're going to pay $1,500, $2,000, which winds up being about the same mortgage payment. You're not building equity. You're losing write-offs. And you're not gaining that's, real estate averages. And I'm not talking about right now, I'm talking about through history, 2 to 3%.
Right.
So while you pay down 2 to 3% of your mortgage every year, and you get a little bit of a write-off, plus you're gaining 2, 3%, about that 6, 7% all money return. There's just a lot right now, and interest rates are still low, very low.
Yeah.
I mean, I know that a lot of people feel like, oh, this is the way it's been forever. I'm going to tell you, I don't understand this generation because I was alive during that time. But in the early 80s, had you said 7% interest rates, people would have been jumping for joy. If you say that today, right now, somebody talks to you like you're a thief, like you're a robber, like you're evil.
That's how I feel.
Because you've been alive and you're a lot younger.
I'm the millennial.
You've had a heck of a run.
I bought it. I'm who we're talking about.
Yeah, but like Eddie, I'll go back in. I mean, you talked about 08, right? I mean, like this is what I'm trying to understand the differences, right? Because I'll be honest, way back when, until I was in finance for a little bit, for about 3 years when I moved out to California, I actually had my broker's license for Texas, California, and Florida, because those are the big things back in 01, 02. That ages me, right? So now everyone knows my age versus the millennial next to me.
We're in the same ballpark, so don't worry.
Yeah. So kind of going back in then, I remember, going through, and the reason I got out before 08 hit was because I was sitting there, and this is the world of negams, your reverse mortgages, and you're just hurting people. I mean, people, especially California, they were buying their homes for $200,000-300,000, and now they owed $700,000 to $800,000 because they were taking 100% equity out of their home every single year, living on that and seeing where we were going. So, I mean, I'll be honest, when I left California and moved back to Texas, you talk about the 8 or 10%. I was an entrepreneur then, so I did a stated loan, which they don't even do anymore. I did pay about 8% for that stated loan because it was a jumbo loan too. So, and that was probably 07, 08 right there. So it's interesting to be able to see the differences and changes what you saw from back then to where we are now and what potential, where we might go.
So the good thing is regulations came into play in '08 that kind of got rid of a lot of those products, because when you saw the dip in demographics and you still had people building more, so what did? They financially engineered products to try to keep the demand up. Not, hey, look, guys, we're entering a 14-year run of less people. We need to produce less. But, it's not just we're Americans. That's an easy way to say we're human. What do you mean the party's got to stop? What do you mean I got to adjust? People are either enjoying the party or, like I always say, they go to bed and they wake up with a hangover. There's no let's wean down type behavior. And that's basically what happened then. There's a lot of financial engineering.
Yeah.
But last year through COVID, they thought the same thing would happen. A lot of people would lose their jobs and mortgages would go the same route. Well, yeah, some people entered forbearance. There's about 2 million that are left. But in the grand scheme of things, that's a very low number. And a lot of people kept paying their mortgage. And the reason is the big old question, why? Underwriting standards and everything are so much more higher nowadays.
Right.
Like, to your point, you can get what is called a non-QM loan, which is kind of for your self-employed, and you show bank statements. But guess what? You got to put 30% down. There ain't no 100%. So there's natural, let's just say worst case scenario, because a lot of times people like to go to either or instead of and. So let's go to the extreme. You do get foreclosed on. That's not going to hurt the financial markets because it takes about 22% equity for whoever's holding that mortgage not to lose. So if you're walking in with 30% down, you walk, yeah, it's a pain in the butt. Yeah, you got to go through legal. Yeah, there's all that. But there's not catastrophic losses that wind up showing up on the balance sheet, not only of the United States government to help cover it, but just in general to your average bank and your average lender, things of that nature. So you kind of have a couple things going. You've got tougher underwrites and more people. That is kind of a recipe for, you can be more selective. Like if interest rates go up, and I know this sounds crazy, it may cool off the housing market, but I actually think that's good for affordability, only because then there won't be, we're in a payment society. Nobody realizes that yet, but the world has moved to payments. We're going to date ourselves here, Joshua, on this one, but when we were kids, there was no 0% on cars.
Oh, no.
None of this. I mean, you actually had to pay interest rates on cars.
Yeah.
So I remember a Corvette, which was like the most expensive car growing up as a kid, because that's before Lamborghinis and Ferraris became normal sightings.
Or the Dodge Viper back
like
then.
30 grand. Yeah, 30 grand, and people are like, oh my God, 30 grand. Now you're like, that same car is like 100. Inflation hasn't gone up that much. So, but payments have been brought down. Why? Longer terms, lower interest rates, very similar. We're really running in a world that it's all about cash flow and payment.
Right.
So as much as people say, what are your interest rate? It's really about what's your payment, because at the end of the day, you're buying a house, $300,000-$400,000. Say you're even putting down just 3-5% down. Yeah. You're getting a payment that's less than a lot of apartments. So it's like, okay, what do I do? It's not like renting a house or renting is going to be that much cheaper. So at the end of the day, you're still applying to cash flow.
Right.
So the difference between '08 and now is you've got more demographics and you have much harder underwrite, which is what got violated. To your point, I remember being in the industry and seeing some loans. I'm like, how on earth does this sound like a good idea?
I mean, it was just putting people, I was like, I cannot. I feel like I'm running over someone's grandmother to close a loan sometimes. But that's the statement I used to make back then. It was, but that's how bad it was. Because you're going, this person has to know this is bad. And that's why I gotten out of that world, just because it was, and I'm glad to be able to see that those things have changed, because that was a scary situation to be able to see. And, as someone that was in it, I was like, man, I got to pull myself out. So, and thank you so much for that clarification. What do you think, Ray?
Yeah, I want to ask a little bit about, I can't say post-COVID world, because unfortunately we are still very much in it. In fact, things might be getting worse. And so this whole dynamic that has happened in the COVID world and remote working has really had some very interesting effects in your world. And we're on LinkedIn, and LinkedIn is a place that remote work, future of work, HR. I mean, this is a, really powerful topic. So I'd love to hear a little bit about your perspective on the implications of the COVID remote working world that we are in, and it's not going anywhere.
So I look at it really as an opportunity. The tough part is culture and building the culture of an organization, because it used to be easy when there was a little bit of locations, but I actually think this is where the real opportunity where creativity can step in, because now you're having to connect to people all the way into their living room and keep them engaged in a virtual work environment. So I think it really tests for an environment where you've got to ask people not only for a lot of help, like we said in Army, but creativity, but you have to also now start rewarding and celebrating the things that don't work out, or you're going to lose that creativity because you're having to touch people. So I think it's a great opportunity. Now, for my industry, it was a boom, not just because of interest rates. You literally saw right after COVID, people wanting somewhere around 600 to 800 square feet more. So COVID's even accelerating home buying, because now people say, I don't have to drive to work as much. I don't have to spend on all this. I don't have to do all that. I can work from home. Now, what I do find curious is I've already seen some corporations who are adjusting their income saying, hey, you're working from home. We don't have to pay you, say, New York rates or California rates because you're now living 100 miles away. That one we don't know yet, but I'm now seeing that happen.
Oh, I can tell you what's happening.
I'm
seeing it on some of the underwrites. I'm seeing it. So my curiosity is, how is our fellow man going to adjust? And how,
woman.
I mean, yeah. Well, I said fellow man, like human. I don't mean gender on that one. Human is going to adjust. Hey, I get it. 56% of my workforce is female, so I understand. That's why I use the very term human. I have nothing to worry about what I've covered.
I just heard what I wanted to hear. Clearly.
Well, I said fellow man, but I incorporate man as in all of us. So, but I get it. Good point. I think it's a good opportunity, but I do believe that you've got to really learn. I think hot desking becomes a big thing. I've already started seeing that where people come in twice a week. I do notice it's kind of wild, the misconceptions out there. I'm seeing more people in their upper 30s to early 50s that want to start working from home, which makes sense because of the kids' ages and wanting to be around and be flexible. They still want to put in their 8, 9, 10 hours, but they may put it in a 5-hour spat here, 3-hour there. So there's some adjustability you have to do there. But I'm finding the younger generation is the one that actually wants to come in because they want mentorship. So the question is, how do you mentor remotely? You're just going to have to do a lot of training and a lot of intentional culture, intentional leadership, because you may not be able to grab it all. And look, sports, military, so many things they focus on training, but in the corporate world, it's here's your chair. You better start producing now.
Yeah.
In any job, doesn't matter what your role is. I think there's going to have to be a lot more investment in their people and their training, and training, not saying just skills, interaction, feedback. We're starting what we call it's from batting average. It's the 350 batting average party. We're going to talk about the hits that were very important, the feedback that was very bought, but it didn't generate a hit. It didn't generate something, because that's the moments that actually generate success later. Because if not, you're going to cultivate a culture that if you don't get it 100% right, you're going to get 0. And I think that's way more deadly than celebrating. Now, that doesn't mean we're going to celebrate somebody not showing up to work or not being good. But if people have the courage to come forward and give a lot of ideas, and a lot of times the ideas are right there, you just got to tweak it.
Yeah.
So to answer you, I think the opportunity is really on culture. The opportunity is really to evolve. I think the opportunity is a lot on, I think you're finally seeing, you're talking about 08. 08 had a lot more to do with a moral hazard, and nobody wants to work for a moral hazard anymore. So as I say, a lot more Gary V style leadership in business and a lot less Simon Cowell. That had its place. I tell people that all the time.
Even Simon Cowell's adjusted if you watch him on the show in these days on America's Got Talent, I think.
Like it used to be, if a leader came down to the lower levels and interacted, oh my God, something was going on. Like, oh, they're about to tell us something, like, famously in the mid 90s, when people found out that a lot of organizations had a lot of operations overseas and they were paying the people. Oh my God, that's catastrophic. They only came down to talk to us. Now, if you don't do that as a leader, people start thinking something's wrong. They're not being transparent. So I think there's just been a metamorphosis. And that is something that I think a lot of people need to pay gratitude to the millennial generation and then Generation Z, because they're not accepting that crap anymore. And guess what? They're right. You shouldn't work for a moral hazard. You should work for somebody and work with somebody who admits, yeah, dude, we messed that up. Hey, here's what we're doing. Yeah, no, you got to own it. You can't really hide, because the days of having a high IQ, well, now a phone is more powerful than any IQ out there. So somebody can call BS real quick.
Real quick.
And I think that's where the real opportunity lies. And
Emotional
people just gotta be
intelligence. Yeah,
cognizant.
absolutely.
Emotional adaptability, intelligence is going to be very, very crucial. Very.
And so you're actually interviewing Gary Vee in a few weeks, huh?
Yeah, it's in 2 months. I'm going to get to have a fireside chat. Not going to lie, I'm a huge fan of his. So I've got to make sure that I bring the great content for the audience, not for myself. You know, I don't want to be a fanboy. So I'm preparing because I want to make sure that I deliver great content for the audience. Because if not, then it's really about yourself and an ego. And you're not really being a good leader, then I shouldn't have been chosen to have that conversation and that privilege with them. So that's what it's really about, is really untapping that branding, because that's what he's there for.
Yeah.
It's going to be at the National Association of Hispanic Real Estate Professionals, and it's going to be like a fireside chat. It's going to really be about unlocking the branding, unlocking the authenticity that you got to be as a leader, really unlocking the potential that you really are your own brand today, which, and I use this metaphorically, the internet, our phones, very powerful. I mean, look, I had to make an adjustment, but from my car, I can now do this interview. But I mean this metaphorically before somebody brain explodes and tries to argue, but the internet did make the world flat. And what I mean by that is we have an even playing field to start there. If you utilize it the right way, you go with it, you can really, I mean, look at all the systematic changes you're seeing because of the internet. I mean, even, you know, paying respect to my family's heritage, Cuba, and you're seeing all the protests. You wouldn't have heard that 30 years ago if there wasn't an internet.
No.
That would have been like some side story. And I hate to say it, probably would have turned out really, really bad for the protesters, just because they could have done whatever they wanted and not really had any social ramifications. So it's really a springboard if used correctly. And that's really what that content for the audience needs to be about.
Absolutely. Yeah.
Gary Vee, I get it, man. I've been a fan of his for a while. I was blessed this way before COVID. We got to share a stage here in Austin, Texas.
Oh, wow.
I will tell you, he was very, very, very down to earth, real cool guy. You know, we met again at South by Southwest again. So, but I mean, yeah, just hang out with. I mean, like it's just like talking, like you and I having a conversation. He really does come in comparatively to a lot of the people out there. And that's the big thing. Like you were saying, Simon Cowell versus, you know, the Gary Vee of these days, because that's what you want to be able to see. People want to be able to see the real, the raw, the real person, not the personification, because everyone has the personification of what Gary Vee is. But when he shows up, it really just is him. It just is him. And that's what we need to be able to see. Yeah. What you see on LinkedIn, right? You were like, oh, we're on the car. Is that okay? I'm like, this is real life. This is that what you were saying too, with all the different aspects. We're on the same playing field, no matter where we're at. People don't want to be able to see something over commercialized, all these other aspects. They want to see the real people behind that. And I think they'll take this conversation that we had today, even with better, you know, insights, just because you're not sitting in a studio, you know, where most people remember me being in a different office. I tore my Achilles. We're downstairs now at our house. And this is kind of where Rachel and I do the conversation. So, man, I really, really appreciate you joining us today. I know you've got a community event coming up as well, too, specifically here on LinkedIn. Tell us a little bit more. I know about it, but I want to, you know, tell us more about what you want to be talking about, because, you know, we're helping.
Well, there's a lot of, you know, the FHFA director for our industry just got terminated when the Supreme Court came down a few weeks ago. And that's going to have some, what I believe, positive implications for the industry, especially for the consumer. You know, I'm a big fan of the borrower. That's why we have the slogan, borrowers are best, because I think if you have that mindset, and what you were talking about earlier, that you didn't feel like you could do it because you were running over people. Well, of course, you were running over borrowers. Right. And they've already gotten rid of the refinance adverse fee. All of a sudden, a fee got put in by the former director. So in other words, refinances, they're not going to get a whole lot cheaper. You're talking about maybe an eighth in rate, but think about it. It's what I always tell people, an eighth in rate. Say it's a $300,000, $400,000 loan amount. You're only talking about $30, $40. That's not going to kill it. But think about if that money could get used for one more dinner out, actually get put to use, because it was a fee that wasn't necessary, that they put in just because he felt like he wanted to make sure that they were hedging for COVID. I think it was more just a certain belief system and a method. Not saying it was right or wrong. It was their own beliefs. We all have our own truths. I say that there's your truth, my truth, the facts, and then the truth. And the truth is a process of asking a lot of questions and interactions and really getting to it, because nobody ever wants to admit this one, but I always tell people that in most disagreements or conversations, 50-50, 60-40, but there's no saints in the room. But we're going to be talking a lot about what those pending things are going to be going. There's a lot of interesting things on some of the things that were done to Fannie and Freddie, some of the ramifications there about second homes and investment properties. Is that going to stay the way it's currently, which could affect that market, especially when it comes to pricing, and really just giving a lot of up to date of what's going on in the industry. The last time I did talk about, do I think there's a housing bubble? I'm sure that will come up, because that is a very hot topic, only because of what happened just only 13 years ago. A lot of people don't remember that, but
Yeah.
And it's a very acknowledgeable fear. So it's one of those, it's like anything else. Everything in life is a risk. The question is, has that risk been evaluated properly? And do you know if you're risk adverse or risk inclined? And just really understanding what your motives are and your goals, not what your friends tell you or what you've heard. Because like I say, there's a lot of unlearning that needs to happen in this world, because COVID, the crash, there's a lot of evolving, the phone, there's a lot of evolving that's happened. And I heard this from somebody, and I don't know.
I think we lost you for a second, Eddy.
We are losing sound.
Eddy, we can't hear you anymore.
That's okay. We can't hear you. Strangely, I don't know.
The fun of everything. I'm just trying to make sure that we've got it. Yeah.
That's all right. We're coming in for a close.
Eddie, we appreciate you, brother.
We're going to put the information in the comments for the call that you're going to talk about. All of this.
Community.
Yes, comment community. Courtney, by the way, hello. Thanks for tuning in. Good to see you. And with that, Eddy, thank you so much. This has been super informational. You've been awesome. We really appreciate you hanging with the B-Lees on our LinkedIn Live.
Thanks, Eddy. Appreciate it.
Thanks, everyone.